Hi, I'm Linda Eedes from Foord Asset Management, and I'm here today with Nick Balkin, who is our Chief Investment Officer here in South Africa. And Nick and I are going to be talking about the shrinking opportunity set amongst JSE equities, Nick. Just to put that into perspective, in 2000, we had 616 companies listed on the JSE. At the end of last year, it was less than 300. So that's a significant decrease in the number of companies which are available to us as investors. So first of all, I just wanted to ask you, is this something that is a concern for us as an investment team?
Yeah, naturally. I mean, anything that shrinks by half is a concern. And as South Africans, you want as many options as possible. I mean, the problem is, as you say, being down to 300, there's still a fair amount of options. The way I think about it is, you've got to fish where the fish are. Unfortunately, in South Africa, the fish are getting less plentiful, they're getting smaller. But importantly, the amount of fishermen trying to get the fish are also less. So it's quite interesting that the foreigners used to be, at least in the foreign benchmarks, South Africa used to be over 10% of the benchmark. We're now closer to 3%. So the foreigners are paying less attention to us. I think that is the compensating factor for, a lower opportunity set, is that the ones that have remained have lower ratings, and there is some value in those shares to take advantage of. That won't be there forever, unfortunately, but for now, it seems to be manageable.
And so, Nick, obviously something that's happening over 20 years must, to a certain degree, be structural, but there's probably also a cyclical element to this as well, which you touched on. Could you elaborate a little bit more on that?
Yeah, I think South Africa is out of favor at the moment right now. I think flow of funds generally wants to go where there's some sort of positivity. Aligned with the valuation is one consideration, but I think the foreigners generally want a good story. They want something to excite them that they can make money from in the near term. So at the moment, prospects aren't that bright. There's a lot of, risk out there, and the valuation's okay, but the foreigner's not going to come just for the valuation. So at the moment, we're ebbing to the point where the foreigners aren't paying attention to us.
And Nick, of course, bringing it back to what it is that we do, how does this impact how you and the other portfolio managers at Foord put together multi-asset portfolios?
Yeah, I think, as you said, we've spoken about on the equity side of things. I guess on the multi-asset side, there are a shrinking set on the equities, but also on the bond side of things, the opportunities for us are more trading opportunities for a lot of the time. When it comes to a fixed coupon bond, yes, the yields are like the equities. They are very juicy, but they do come with risk. It's not like there's no risk, because the government's balance sheet is pushing out of control. So what it could optically be a good, cheap entry point at the face of it's not really. So what are we doing? We're having to be a bit more creative. Things like inflation-linked bonds that you can get more than 5% above inflation. They earn very good returns, but they also have a much better downside protection. And therefore, you have to balance the different parts of the different asset allocations to manage the risks that the smaller JSE is suggesting, which is that South Africa is in a structural decline. In the global balance funds, I guess we have more opportunity set because we have the offshore to also compensate for the South African economy. And we use that quite effectively, and we are quite excited about that side of the overall multi-asset funds.
And Nick, speaking to that specifically, we have seen the allocation to offshore increase over time. Yeah. How much of that speaks to what you're talking about now versus obviously just the Reg 28 limit increasing as well?
Yeah, I think it's both. I think at the margin, when it was at 30, we were bumping up against the 30. We don't think we're going to be naturally at the 45% maximum permanently. We do think that there's a bit of element of tactical around that. I think it did provide us the opportunity to take offshore, but at the end of the day, we will be flexible. When there are opportunities in South Africa, that 45% will come down also. So I do see it as an element of tactical and the opening up of Reg 28 at the same time.
And Nick, let's speak about liquidity. Do we face any liquidity issues as a result of a smaller opportunity set?
Yeah, I think that's the biggest problem, is that some of these things are cheap optically, very good opportunities, but you need to sell them also at some point. We like to buy and hold things for very long times, but at the end of the term, there needs to be someone that you can transact with, on the other side. And as the liquidity dries up, it is a very important point to take account of. Importantly, at Foord, we are really in that perfect niche, if you ask me. We're able to buy the 1 and 2 billion rand companies. We're small enough to go there, get into a company the size of Udeco, which is relatively small, well managed, and exit also. I guess if you are bigger, it becomes a much bigger problem to deal with this liquidity. But we're quite well positioned for that.
Nick, I want you to put on your CIO hat now and talk about how we allocate research responsibilities within the team. So what we've seen some of the local managers do is actually take on global stock responsibilities as that local investment opportunity set has shrunk. How has this phenomenon actually impacted, if at all, how we allocate research responsibilities within the local team?
Yeah. I think it's a good question. I think from a Singapore team, we've got a very solid team. They're sorted, they can cover the global stocks, and we can leverage off that. But the important thing is actually the local team is very solid. In fact, we've decided to invest in the South African team, build it up. We've had 2 new exciting hires. So I think given where we are right now, as I mentioned a bit earlier, we really are in the sweet spot. We're able to take advantage of some of these really interesting companies. We think that there's still exciting opportunities to unearth in South Africa, and we have a South African investment team that's ready to go.
Great. Thanks, Nick, for your input today, and thank you to everyone who's joined us.